Willem-Mark Nabarro is head of European equities at Exane BNP Paribas. He joins us live from our Singapore bureau. So, Willem, how do you feel about these rising bond yields that we're seeing in Portugal and in Ireland? Do you think this means that the debt crisis is far from over and still poses a significant threat to Europe's recovery?
Well, we will see this on several occasions. We've seen it. We have seen it now. We've seen it in the past as well. We'll not be surprised if we're going to see it again. The moment people get a little bit worried, we see effectively the bond yields increasing quite a bit. That's something we have been mentioning also on several occasions. We do not believe in any defaults. Remember, if you see 6 months ago, the world was falling apart over Greece. Now we're looking at Portugal and Ireland. Portugal is doing very, very well, to be honest with you. Very strong government in place. They are doing everything possible to get effectively the debt into under control. And Ireland is doing also its best. So effectively, as far as we can see, this is more short-term trading than really a structural problem.
You don't see a situation where Ireland has to turn to the EU and the IMF for a bailout then?
We don't foresee that for the time being. Also, if you see effectively what happened, we've got now the special program as well, which got a AAA rating in Europe, which may help them as well if needed. For the time being, it doesn't really look that we're going that way. And that's also why I think effectively, I'm not a bond expert, but you will probably have some opportunities for bond traders in here as well.
All right. Well, European equities since about the end of May have gained 9%. That is, by the way, when your team said that they would start moving higher. But my question is this, is it sustainable, especially with these worries that are resurfacing over Europe's debt?
Well, it's definitely sustainable as far as we can see. We're not going to have double-digit growth, that's for sure. That's something we have been mentioning over and over again. But there is definitely going to be growth, and that's also why we believe that the European equity markets will trend higher as well. There are, of course, some sectors which will perform much better than other sectors. Luxury goods is definitely one of the sectors which will probably perform better, especially if you look at companies like Richemont or LVMH. Look at effectively what is happening in mainland China, where effectively the growth is definitely there for those companies. We just mentioned about the recession over in the US. We have seen effectively the US consumers coming back also in luxury goods. And we see the same thing also in the automotive, in the higher end. Companies like Volkswagen is doing very, very well. And also companies like Daimler are doing very, very well as well.
So more upside over the next few months in European equities. How much?
We've got another, say, 8 to 9% to make for the European equities overall in the different indexes. And we would also be looking effectively at companies with sectors with very high free cash flow, very good valuations, very good strong credit ratings, and especially also very strong management. You might also be looking at some of the late cyclicals at that moment of stage, where we still see some very good upside potential, and we're looking at IT hardware.
Willem, very quickly, what's the biggest threat to all of this? What poses the biggest threat to the global economy?
The biggest threat to the global economy is if effectively we have to believe certain doom people, we're going to get a double dip, and we do not believe we're going to get a double dip, but effectively that might be the biggest threat. Or if somebody gets a brilliant idea of pulling a trigger on some kind of weapon, and that, of course, but that is not foreseen.
All right. Thank you very much. Well, forget